Analyst in the pipeline. I mean, certainly the major fears around Greece have subsided. We're getting the good data out of the US. I don't think China is about to fall in a heap despite some worrywarts out there.
Well, I guess the major influence on the Australian market is the Chinese market, and if you have a look at the Chinese market, it's not unusual to see those big blue chip companies in China with single-digit PE ratios. So talking about strong economies, China is stronger than the Australian economy, and yet valuations are much more attractive in terms of the Chinese market. So I guess if we have a look at how the Australian market is built up, we've got the largest weighting towards that mining sector through the materials space, and then our financial space. So really, we do take a strong influence from China, although the US is still a key influence. And if we have a look at the performance of the Australian market in the year to date, we're somewhere in between the strong performance that we've seen from the US and the performance that we've seen from China. If we have a look at the US last week, a fantastic week last week with a 2.5% gain, where the Australian market trailed by 1.5%. But if you have a look at the Shanghai Composite, it actually had a negative week and it actually went backwards. And if we have a look at what's been happening in terms of China's growth, we've been downgrading our expectations from 8% down to 7.5% at the moment. And that, of course, has an impact in terms of the mining space. Strangely enough today, it was the mining space which were the star performers. We heard reports that Vale had stopped their transportation of ore because of an accident, and that helped the iron ore miners. We saw BHP, Rio Tinto up by 1.1%, Fortescue was up by 2.9%, Atlas was up by 3.8%, and of course it helped that it was those energy and material stocks which outperformed in the US as well. But unfortunately, the Australian market really dragging behind the US, and part of that are expectations and a downgrade of expectations coming through from China. Yes, it's still strong, but the market was pricing in 8% growth, and now it's having to price in 7.5%. How
much significance, Julie, are you placing on, I suppose, not just 4,300, though it is a very round number, but as David says, 4,317, and others talking about 4,360. I mean, it seems to be every session, taking on more and more significance, the fact that we cannot finish above it.
Well, it is a psychological area, 4,300 points, but if we have a look at just the impact it has had in terms of the market and acting like a ceiling on the market, we only have to look at the last 3 months of trade. And if we have a look at the last 3 months on the Australian market, this is what it looks like. And you can see that I've just drawn a line at that 4,300 point mark, and we've been through that mark and back down at 7 times now in the last 90 days. So you can see just how strong that resistance level is, and that's really why people are watching that 4,318 points mark. It's the highest that we've been in that 90 days, in fact the highest in 1 month, and if we could break that 4,318 point mark quite confidently, then perhaps that will give us a clear run to 4,500 points. But you can see how effective that ceiling on the market is in a technical sense. And to look at a stock that has reacted quite strongly in a technical sense over the last week, last Wednesday we were talking about QBE Insurance and that bottom triangle that was broken. And to see what type of impact that had in terms of QBE, we saw extremely strong volumes coming through on Wednesday, Thursday. Last week we saw $130 million worth of shares being traded, which is 41% above the average in 2012 so far. And then we saw another big day on Friday. Well, QBE Insurance last week was up by 10.7%. Today, another strong performer up by 3.4%. Volumes are starting to come a little bit down, but targeting that $14.50 to $15 mark. So having a look at QBE Insurance, and this is a chart of the last few months. You can see that bottom triangle, we broke through it, and the last 5 sessions have just been extremely good for QBE Insurance. But for the Australian market, looking at that 4,308.
Potential ramifications for David Jones is an interest, stock interest for investors out there at the moment. I mean, we talk about the multiples that it's trading on, the fact that, a lot of people talk about it's got a pretty good dividend yield at the moment. Is it a stock that you think has bottomed and now is starting to look attractive, or do you see further downside for David Jones?
I think David Jones is a little bit from Myer if you look at its core customer base, in that it's more white-collar based. And if you have a look at the jobs market in the white-collar base, whether it's in the financial sector or in other spaces, what we are seeing, some pretty high-profile job losses. So that weakness in David Jones, probably the case for it a little bit stronger at the moment than a stock like Myers. So I don't think the cycle has bottomed for David Jones. The first thing you'd be looking at was for a bounce back in revenue. And of course, news that this credit card deal with Amex, which Amex has effectively underwritten to FY13, coming to an end, a blow for the company, given that we are seeing weakness in that financial services area. Customers are not only not spending money in terms of at the shops, but they're also paying down debt. So a double whammy for David Jones there, being hit on the revenue side by customers spending less, and then on the financial services side by customers looking to pay off debt when this deal with American Express is coming to an end. And this was one of the key things we were looking for in terms of the update from Wednesday, the outlook for their financial services division after FY13, and the fact that newspapers have already come out and said that perhaps earnings will be slashed by 50% from this division. I guess a big negative coming up to David Jones's first half profit result on Wednesday. First half profit result, no surprises really expected there, expecting to see a decrease of 15 to 20% in line with the company's guidance. But the thing that the market was looking for, number one, was an outlook from that financial services area. And then number two, having a look at those gross margins, which have probably been under pressure because of clearance of some of the stock from David Jones. And then number three, the online strategy.
All right, got to